you've ever wondered who actually uses hard money loans or why someone would pay higher rates instead of going to the bank, today this video is for you. I'm going to talk about why borrowers choose to borrow hard money rather than go to the banks. Hi, my name is Rodney Miller. I'm with Hard Money Partner. I loan money in Oklahoma City and Dallas, Fort Worth, as well as we're getting into other states now. So if you need a loan, give me a call. All right. So what is hard money and why do people use hard money? Hard money is basically a private lending. It's a business or a person that loans money and it's based more on the asset than on the actual borrower. Asset-based lending, it focuses more on the property, not just borrower income or borrower credit, but more on the property and the value of the property. And hard money lenders usually mitigate their risk by limiting the amount of money they will loan on a piece of property and keep the loan to value low, maybe 70. Some go up to 80%, but usually around 70% is the max all in they will loan. Hard money loans are short-term loans, typically 6 to 12 months. We at Hard Money Partner do 12-month loans, and occasionally we'll extend. Hard money loans are designed for speed and flexibility. They're really attractive to real estate investors who get deals and need to close really fast, and they can't get the banks to close fast enough for them. That's where hard money shines. We can get in and get the deal financed within days, maybe a week, not months. Some banks take up to 2 months to finance deals. Hard money is not permanent financing, very short term, 12 months, as we discussed earlier. It's bridge financing. It's usually to get you from point A to point B. Like if you're flipping a property, you need to buy it, get it fixed up and sell it. If you're doing a BRRRR or a rental property, you need to buy it, fix it up and get it rented. Then you'll take us out usually with another longer term loan, or you'll refinance us out of it with a bank. So who is the typical hard money borrower? Let's talk about that. So a typical hard money borrower can fit several categories, but usually it's going to be a real estate investor or it's going to be a business owner. Those are two of the main ones. Occasionally we get somebody that doesn't fall into that category, that might have inherited a house, but pretty much real estate investors or business owners. So under real estate investors, we're talking fix and flip investors. They're buying a house at a discounted rate. They're going to put some money into it. They're going to sell it or refinance it. Usually they're going to sell it to pay us off. So they need the money to purchase the house and they need the money to fix the house up, like the construction budget. And then they, sometimes want us to carry some of their points and fees and costs. But their whole plan is to get from A to B, buy the house, fix it up, and then sell it and pay us off. Another way our money is used with real estate investors for the BRRRR method. BRRRR stands for buy, rehab, rent, and refinance. Investors are going to buy a property that they want to keep as a rental. The property is usually rough and needs to be rehabbed before they can rent it out. And banks don't like rough properties. Banks really prefer the nice, pretty properties that already have a renter and tenant in place. So we kind of fill the gap as hard money lenders. So the borrower, being a real estate investor, will come to us and want us to help purchase the property, use our money to buy it. Just like the fix and flip, they'll want to use our money to fix it up, but their end game and their end goal, exit strategy, is to get a renter in there, have it fixed up, then take it to a bank and have a bank refinance it and pay us off. Where this really helps is banks don't really like distressed properties. Banks take too long, usually, for real estate investors who need to move fast. Hard money just shines. We fill the gaps. We do it fast. We do it based on the property itself, and we just make it easy. It's an easy process because we're not really looking at your bank statements, your tax returns. We're not digging into your personal financials. We are looking at the property. If we can do that, usually in one quick visit, take a look at it, put a value on it, and really tell you how much we can loan on it. It's that simple. So another borrower of hard money is just your typical cash out business owner or investor or person. I'll give you a scenario didn't fall under the business owner and investor. We get these a lot. Let's say Jack inherits grandma's house. She leaves it to him in a will. Grandma's house needs a lot of work. He needs to fix that house up so he can sell it for top dollar. Well, the house is free and clear. It's sitting empty. He doesn't have good credit, or he just doesn't want to go to the bank for one reason or the other. So what we can do is we can let him pull money out of that house via hard money, and then let him use that money to fix the house up and get it ready for sale. And then he will, within 12 months, he'll be able to fix that house up with our money, sell it, and get top dollar for that property. That would be a scenario where you would not have an investor or a business owner use your money. But other cash out borrowers do fall under the business owner and investor category, and they're usually pulling money out of a property to fix it up, or they're pulling out money out of a property to use for business purposes. As long as they don't live in the property and they're not using the capital for personal expenses, hard money lenders will step up and loan money on any property that's free and clear. Why hard money? And that's basically banks take 30 to 60 days to loan hard money. Hard money can close in as little as a week or two, so we're much faster. Borrowers of hard money usually prefer speed and certainty over price. They're willing to pay a little bit more to a hard money lender just for the easy transaction and the speed. Hard money can also be used for auction purchases. Banks don't want to loan on auction properties, foreclosure sales, off market deals, wholesale deals, and estate sales, areas where a bank can't move fast enough to pick those deals up. So let me talk for a minute about how to find a hard money lender. If you're in a market and you think you need hard money, there's multiple ways you can go about finding a hard money lender. If you go to the local real estate clubs, you're going to probably bump into 10 hard money lenders. That's a good place to find them. You can go in on Facebook and find all the local investment clubs on Facebook, and they usually have some hard money lenders in those. You can Google hard money lenders in your area, and you're probably going to find some hard money lenders. I would tell you to try to find a local hard money lender, because there are going to be a lot of national hard money lenders that are going to act like they're in the area, but they're really not. And it's really important that if you're going to borrow money, you borrow from somebody that understands your area. It's going to make your transaction so much easier. It's going to go so much faster if you can find a private lender or a hard money lender that actually lives and understands your local market. Hey, and if you're in Oklahoma and you're watching this, I'm your guy, Rodney Miller, Hard Money Partner. You can Google me. You can call me. I'm always available to talk, grab coffee with my borrowers. So if you were in Oklahoma City, even Dallas, Fort Worth, I spend a lot of time there and make a lot of loans in the Texas area. So really love to work with you. So if you're local, please give me a call. So just to wrap up, banks move slowly. They have layers of underwriting. They have an appraisal process. They usually have a loan committee. They want income verification, debt to income ratios, all those things that hard money lenders don't care about, because we are loaning on the property, not the persons. Banks care about tax returns, W-2s, debt to income ratios, employment history, all that stuff. We don't care about that. We get right to the meat. What's the property worth? It's worth 100 grand. We'll loan you 70. Let's go. That's how easy it is. So that's kind of the nutshell on why people borrow hard money and why hard money lenders fill such an important space in the lending business when it comes to transactional real estate investing in general. So if you're into these videos, if you're into hard money in general, that's all we cover on this channel. Please like and subscribe to my channel and hit the notification bell so you get notifications when new videos come out. We really appreciate you helping us out. My next video is going to cover the lenders, the hard money lenders. So if you're at all interested in the hard money lending business, you want to get into it, or you just want to know more about it, who you're dealing with as a borrower, I'm going to talk a lot about how the hard money lending business works, how to get into it, all the things that a hard money lender needs to know to run an effective hard money lending business. So check out the next video. Rodney Miller, Hard Money Partner. Thanks for watching.